Hello, friends. What's up, YouTube and team? It is recap time, another one. So if you were paying attention today to that CPI, core no drop, headline fell 0.1. So what does that mean? Is that setting up the stage for a softer Powell tomorrow where he can butter this up and continue this very slow melt up? And I know it sounds like something that'd be fast, but melt ups can be slow. Look at a candle. When a candle is lit and it melts, it's not very fast. You can melt up very slow, right? And we know when the market slows these candles down, like this, they shrink these candles down and it locks it in a range like this. And this doesn't allow you to get anywhere. And all of a sudden, out of nowhere, volatility sweeps in and we start going crazy with volume, right? And when it slows down the candles like that, you notice like moving averages, standard deviation, all has time to recalculate ever so slowly so we can continue forcing one way very fruitfully. So let's talk about today's action. Now, did start the small account today, and I promised you guys I would do a small account challenge starting with about $1,600, $1,600 some change. And that's what I put in a Ninja Trader futures account. And I'll be trading micro contracts 1 to 5 and try to build this account without blowing it up here. I've done about 5 in the past, haven't blown any up yet. Knock on the old wood desk here, but it's going to be fun. So starting with 1,600 and some bucks. Now today's first trade day, I can slide over. You can see the total P&L. I got some open positions here cruising as I'm taking a peek at, but the P&L kind of rolls over. So we ended the day at 236, 238 bucks, something like that. So pretty much 240. So starting with a $1,600 max, 1,600 like 40 bucks. The account is now 1,884.44 cents. So it started just about just 1650, rounded up. So great first day. Took 3 separate trades, and I want to talk about those trades and CPI. So if you've seen the very slow kind of tentative way they release CPI, 0.1 on the headline, again, core nothing. And again, that's kind of okay because that either sets up the stage further for core to be falling. Then, of course, the melt up can continue, force up. So let's say there's a big drop in the market. Hint, hint, we go for some of those big old gaps we see on the S&P 500. And then core starts to fall, right? But ever so slightly, we are still looking for current melt up. No, nothing else. 100% melt up. We've been saying it for weeks. Check the videos. So what I like to do is utilize a hidden Fibonacci system here. And I can't really tell you too much about it, but I can tell you where most of my targets were. My 2618 that I can't show you guys because it actually marked to the penny came in actually right here at the first high. So this was the 2618. And I'll show you another version of how we do this with the regular CPI. Now, the hidden Fibonacci that we got going on right here that leads us much, much higher. Let me delete this one. We're going to get into this right here. Now, the data candle high-low, CPI, right? That's what we're going to focus on today. And my trades were based off the 1-minute open chart, okay? So let's go off a couple of these small account trades and just watching MES and going through the indicators that we love so much. Now, I was watching ES and MES. Now, something to keep in line or note here, after that scoot up in CPI. So let's take a look at all the indicators here. This pressure push up into highs, right? Came to half deviation, right? Failed in between our +1 in regression trend on the 1 day, 1 minute. Now, that was a beautiful resistance zone, but let's take a look at all the other indicators telling us that we were going to have a nice little sell back down. Now, I wasn't calling anything for a gap or anything like that. We had some very advantageous targets for the 200 SMA and the 5-minute 100 EMA to that downside on those respective timeframes. Now, if you're looking at the 1-minute chart here, it'll tell you that this high in pre-market, we were getting cooked, right? Look how many times it got cooked. And of course, that is after a decent CPI print, right? Cooked all the way back up to pre-market highs and then cooked a higher high, right? But notice something about the RSI. It never went hot, right? It wasn't even over extreme overbought conditions like we were in pre-market. So that scratches that little back part of your brain that goes, okay, why are we not, super high? And during live trading hours versus pre, it's obviously a lot easier to get over hot in pre-markets, get forced up, not as much volume, so on and so forth. But after it is dumped down to the bottom channel here, ripped back up, that's looking like a lower high in indicators, right? Divergence in the indicators. So we have a lower RSI, MACD, of course, doing the same thing. So if you look at the MAC here, we got a beautiful cross of our moving averages on the MAC, headed down, dipped into negative territory, reversed right away. And right where that negative territory is, going straight up, same with the RSI. Cool was opening up right on VWAP and giving it a little exhaustion push. And this is just pressing the shorts out that may have gotten pre-market high and is looking for an easy fail out of the gate. market's not going to give you anything easy. That's why we wait for confirmation. So as we came from here, no trades at all. Let the push happen. And then we got these lower highs right here. Now, looking at the hot here in pre, lower TTM waves, going through a sell wave, so on and so forth. The MAC, very nice here on this lower high. Along with the RSI's lower high here. Those were the keys, right? So seeing the intraday indicators doing this, I'm like, okay, well, we probably need a back test of a moving average, right? Like a 200 SMA 1 minute or 100 EMA 5 minute. And those are what we usually go for. So every time I seen a little pop back up here, I knew that there were no volume beat systems for me. So there was no buyer volume that was going to push this any higher. This was the push out for the shorts. So squeeze the shorts out, then reverse back down and continue. And if you want to trap the longs, it's another way to do it. False breakout. So broke out into highs, blew out the shorts, trapped the longs. Now we've seen that coming because of the intraday indicators. No hot, TTM, back, lower high. Look at what we just did. Now when the oscillation continued to cut right to the zero and create a lower low down here on the MAC, and same, getting trapped into that bottom channel here of the RSI, we knew she was coming down, or at least had a better chance to. So I shorted into these two tops and rode that down 1, rode that down 2 near the 200. Now I got it got out around the 200 SMA a little bit ahead of time, because I do like to get out of these targets, because shying has been a very big thing down price action, or very close to. So this last candle right here, about 910, is when I got out of those two shorts. It was about 18 points altogether, traded no more than 5 MES contracts. We ended up with $240 on the day. Now that is only utilizing again 5 contracts. Now margin on IntraTrader is very easy and very low. So $50 for one intraday contract of a micro. Okay, MES. That's $50 to get in, and $5 a point ran. So 4 ticks equals a point. So when the futures go a whole point, you win $5. So on and so forth per contract. Now, there is no PDT in futures. If you have any questions or comments on that, I'll be covering a whole video on that. Please let me know. This is why we trade futures. The margin is high. The skill level should be also. This is not a toy. So as we got into the MES, I shorted here, came back down, walked it, even took a little bit of a long back here. The secondary trade, got an extra like $15-20. Now, I have to be super careful with a $1,640 account. Right? Agreed. It's not a whole lot of market usage to do, because each contract, notably, even if I did 5, that's $250. I can only take like, even with, you got to give yourself a rule of margin. I don't even want to take more than 5, but I mean, 10, you can get up there $500, and I got now about $1,300 worth of usable margin until they would close or liquidate my trade. And you don't even want to think about that. You want to think of hitting these key markers, right? Getting those shorts and getting your bag, right? $30, $40, $50, I don't care what it is. Those add up extremely fast. So in 3 different trades, and only 3, I think it was 1, actually 4, one tiny scalp, and then 3 decent trades accumulating just under 20 points, I was able to pull $240 out of the market with a capital of $1,640. Now, not that impressive. As we build this small account and grow it, we will get to bigger, stronger trades. But we have to be extremely careful on where our profit takes are and how we are going to be doing that. We're going to be starting a series on that after this video. But because of these markers and the indicators, we'll go over one more time here real fast. RSI bottom of the channel, lower high on the hot, lower high in the MAC, beautiful downsides to a reputable support, which is nice little Fibonacci channel here. Didn't quite tag our magical moving average here. I can't give away, but that pushed, did the higher low, one more high day, and obviously trapped near 4,400 on the futures, right? So we go back to our futures trade here. Futures chart here. We have the chop at 4,400. 4,400 is a huge psychological level, and we are setting the stage for Powell tomorrow, right? So again, not going to be a trade zone. As I've been telling everybody on the team here, it's not really going to be too big of a trade zone. If you go to 5-day, 5-minute, look at all the opens right here. It doesn't do much, right? So besides the new contract pop here, and we're going to have to deal with this later, but this right here, all the way till nothing till about 2-3 in the morning, that's the going rate. For China overnight, we'll usually get a 2:30 a.m., 3:30 a.m., right around there central move. And I'm sometimes awake for those, sometimes not. But I usually say leave them alone. So when we come into huge day to days, pre-market being Powell, CPI, whatever it happens to be, the day prior is pretty dead after hours, right? Or the day leading up. So once we open and got some volatility, we had a bunch of jam here to make way. Now, we have a very, very huge over-under level, 441109. Now, above this over here, just above that 4,400 psychological number, we'll get that coming in like right here, right? So very close to the 4,400. We dipped into that, back tested it. So once we were over 4,400, we back tested it to confirm 4,400. And then we just chopped. We just grew sideways pretty much. We had a pretty ugly range, not a whole lot of clean moves. And something to note here on the SPY in 30-30, with that chop range, we are just setting up for Powell because CPI wasn't supposed to be anything kind of crazy today. I think it was like a 0.6, 0.7%. Price didn't move from wherever it's going to be, and it barely moved that. So it is what it is on that. Powell tomorrow, the whole market eyes on that. Now, the 30-30 on SPY, something we always try to keep track of. Notably, I want to say, or show you guys, the heck is this guy? Show you guys how the RSI read here as well. So at the last trade day, we had that big old push up, right? And then it just stayed hot right here. Again, look at all of our indicators here. Even though TTM went down, MAC got across, it never really came down. Data hit, came back up, but look where data hit and data opened. We're still, and again, if you have any confusion reading these indicators, please check out the playlist below and how we use these. A couple quick videos for us. It was in the top channel of the RSI, right? So that is uptrend, okay? Without a doubt. So until it gets underneath and rejecting and trending to the bottom, we're still looking for upside. So you notice right after the data hit here, came up, went hot on the push, and where did that pull come? Big extension, pulled back down, right? Bottom of the data was the 50 point. So here's the data, 50, up, pulled back down, and just stayed hot. And every dip was bought. We're still in the top channel trending, right? Doesn't look all that hot after hours and, oscillation to the downside, but didn't either yesterday, right? And it doesn't matter because the market can still stay pinned to the upside far longer than you can keep that short on. The manipulation and crazy upside that they play at the speed of the candles is just fantastic to play. And I don't say manipulation is a bad thing a lot of times. People take that as a horrible thing. Just, view it and play it. It's very easy then, right? So, with that being said, look for the continuation. 30-30, 10 SMA right here. Anything above that is still going to be just reputable. We never had a pullback during live hours, I don't think, to the 50. So it's still in FOMO delusion mode here. Yeah, yesterday was the last time it's seen the 50 on a real tag. This is a pre-market tag of the 50 SMA, and that's what I'm referring to right here. And we're just riding the 10. So as long as we're above the 10, this is not coming back down. Or we're just going to get manipulated higher, higher, and higher, push, 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 because, well, shorts love to short stuff just because it's up, and the market loves to push them out, and we don't play that. We play the trend, and trend is friend right here. And melt up, which we've been saying for weeks, is on deck. So that narrative push here, we're going to look at a couple instances for Powell moving forward. We do have a couple targets, and we'll have to see how bad that Powell move is going to affect the market. But as far as now, and as far as our small account challenge just starting, as far as getting data and being reactive today as it comes, it's as simple as that. So utilizing Fibonacci, I'm going to say above the 61.8 that we have, 435.50, that's going to be my directional. So anything that is going to be trending above there, which again, you should just use the 30-30 because the 10 SMA loves to manipulate on the 30-30 and just keep pushing higher and higher and higher, which is perfectly fine by us. I have zero incantation of shorting anything here. That is just simply not a good trade. So I'm going to stay away from that. Now, watching some of the overbought indicators here, we are into the stand dev. You hear us talk about stand dev +1 on 30-30 a lot. That is one thing that is kind of eerily stopping us. But again, in a melt up, it doesn't really matter because melt up is the psychology. It's the speculation of what's going to happen with the feds and everything else. Now, when the news comes out, that's when they sell, right? You FOMO up speculation, news comes out, sell the event. You know the drill. Now, with that being said, we're going to be watching this 435.50, okay? So if he even comes down in the morning here, waits for Powell, and Powell does whatever he wants to do, great. If not, we have an opportunity even within 7 o'clock, range back up to like 437.64 here, and just kind of chop, chop, chop. I don't expect any hardcore follow through. I don't expect any kind of secondary gap and go unless it's really, out in outer space, which is fine. We've seen multiple instances of where that can happen. Just blowing the top off over and over and over, multiple gaps as you see here. There's a lot of those. Go to some of those weekly dips that have launched here where it was just week after week of green. It can stay extremely strong with zero pullbacks, right? And you want to play that to your advantage. Now, we are getting up there. 5 weeks in a row is a little tentative there. 1, 2, 3, 4, 5. We're in week 5 right now. Not a lot past 6 that you ever see in the green. 5, 6 for a little bit of a pullback. Markets cannot go straight up. That does not change the theory that we will be pressing up higher and higher and higher. But it does change where we do re-enters of trades. So as far as I'm concerned, 437.64 is more of a targetable upside, and we can have a little bit of relax. That's just above yesterday's highs right here. If we dip that down, we're watching for 435.50 to kind of chill out and watch for the 200 SMA, which is the pink dash line right here, catch up on the 5-minute, and that is going to be your over-under. So the two things I want to see is the 5-minute 200 become a rolling up support, and I would like to see the 365, or is it 465? 435.50 Fibonacci level to hold. So with that support being right there and the rolling 200 SMA 5 minute to come up, we could push towards 437.64 even after hours here, scam up a little bit. Anybody that jumped in, short at the tops, even on futures, you got to bust them out overnight. That's the normal. Manipulate overnight when markets closed, force the gap, so on and so forth. Very common. So with that being said, those two targets are on watch. Just to reiterate, remember in our last video here, we said the hot on the daily is coming. So if Powell turns into a sell the news event, please be aware. You were warned. One more time, I'll explain it back here. The hot can stay hot for a little bit. If you look up right here, when it started hot, right? Where is that? Right there. 811. Look up at 811. Started hot on a red day down, right? Transferring over 1, 2, 3, 4 almost days up into the over purchased, right? Metric. It was too hot. Doesn't mean it has to start toppling over right now. Doesn't mean it has to just die right here. It can force up. Now, where would that force up lead us on a couple more green days before the gap? Well, it doesn't really have to go anywhere. We could actually get an inside day where Powell gives us like a wick up, and we get an inside body day, and then there, and then we hit the gap one more, and then we start trickling back down to unfilled gaps. Then I assume still higher. So let's watch for that. So it's all up to Powell. I'll try to get some live trading in there tomorrow on that, but those two levels are it. And let's just wait for data and be collective. We'll catch you guys on the next.